All right, we are back for another Friday financial wrap-up without Mr. Michael Zuber. He is traveling, out having fun. As you can see, he has been posting daily financial news. This is for August the 23rd, 2024. Let's get right into it. I know I'm going to be talking about the NRE Settlement. What is that? The National Association of Realtors. A lot of chaos around it. We're going to talk about that. What does it all mean? We're also going to talk about the Fed, right? We always talk about the Fed. Michael, has been talking about that a lot in the daily financial news. Can we expect a September rate cut? I'm going to give you my opinion. We always, we know where Michael stands on it. He's talked about it a lot. We've talked about it a lot on this channel. We'll also talk about unemployment numbers as well as 30-year mortgage rates. What can you expect going forward? And then a big number, July existing home sales on the rise. We'll talk about that. And as always, we will finish strong talking about opportunity. Let's get right into it. Now, a lot of opinions about the Fed, the Federal Reserve, the federal funds rate. Will we see a cut in September? A lot of people think it's completely obvious. We're going to see a September rate cut. The Fed September meeting is scheduled for September 17th, 18th, less than a month away from today. Again, this is for August the 23rd, 2024. Will we see 50 basis points, 100 basis points, 25 basis points, or maybe potentially no cut at all until November? Well, a couple of things in the headlines. Philadelphia Fed President Hawker, he advocates that he believes that we're going to see an interest rate cut in September. He said that he provides his strong endorsement that they should absolutely cut. On the other hand, you also have Kansas City Fed President Jeffrey Schmidt. He was on CNBC this week, and basically he gave the impression that we need to see more data before it's very evident. Now, a couple of things to look at, and a lot of things, something Michael and I have talked about. Weekly unemployment claims this week, 232,000. Now, when I look at that number, again, I don't know a lot about this. I'm learning just like a lot of you, following Michael, being on the show, doing the show now for 2+ or minus now. I know we've been in a range, unemployment weekly numbers, unemployment claims have been in a range of 220, 230. We had a slight spike up maybe about 7 weeks ago to 240 plus, 242, I believe was the number. Now, as per Michael, he said this on the Daily Financial News this week, live from Iceland, by the way. It looks nice and cool there. He had a jacket on, by the way. He looked very comfortable, not like this 100-degree, 90-degree heat we have in California anyway, where I live. Now, Michael stated that he felt that unemployment numbers would need to spike to 300,000 plus unemployment claims on a weekly number in order for the Fed to really warrant or to create an emergency or an urgency for the Fed that they must cut in September. That otherwise, everything's moving along. CPI, PPI, the number, inflation seems to be manageable, and yet it goes back to this other comment, which is Michael has always said, higher for longer. That the Fed would, in fact, keep the Fed fund rate just a little bit longer than they need to, just to guarantee, just to make sure that we get through the woods and that we don't see a second trend or a second wave or a new wave of inflation. So very interesting times. Today, Friday, August the 23rd in Jackson Hole, the Jackson Hole Economic Symposium. This is where they do this every year. It's an annual event. I don't know how long it's been going on, but I know for the life of the show, for the last 3, 4, 5 years, following Michael and being a part of the show, dozens of bankers and policymakers, I believe, attend this event. And it's a symposium. And what is a symposium? They get together and they share ideas. What's really going on in the world? What's going on with the economic policy, worldwide. And so Jerome Powell will be speaking today at Jackson Hole. What can we expect? Well, Michael has said this many, many times, and I would tend to agree. In fact, a former Fed official, Lou Crandall, had the best line. Stop me if you've heard this before. He believes Jerome Powell will say, we're still data dependent. What does that mean? He's going to take as much time as he needs. He's not going to give an indication today at Jackson Hole. He's going to say, well, maybe, maybe not. We're still data dependent. He's going to look at unemployment numbers. He's going to look at PPI, CPI. He's going to look at every indicator possible between now and the next 3.5 weeks, basically a month from now, that September 17th, 18th meeting when the Fed will they cut rates? Will they not? Time will tell. I'm with Michael. I'm going to stay with Michael on this. I believe that higher for longer. He said it for a long time, so maybe I'm brainwashed. So we'll see. I'm going to bet no Fed fund rate cut in September. Time will tell. Now, let's keep moving. Home sales rose in July. For the first time in 5 months, July existing home sales broke a 4-month losing streak as supply also rises nearly 20% year over year. Now, so I want to go through some of the highlights of existing home sales. Now, inventory was up 0.8% month over month. Now, this was up 19.8% year over year. So what does that mean this year compared to last year, month over month, July compared to the month previous? Now, median home prices still very strong, $422,600, up 4.2%. The average time on market, this is interesting. Michael's been talking about this. He's been calling it. We've been talking about it a lot. 24 days on market. This is up. We probably will see days on market continue to climb. We'll also probably, once we get into September, we'll also start seeing sellers pulling their homes off the market. So will we stay in low inventory? I think so. However, demand is still, I believe, going to be soft. So looking at first-time buyers, they accounted for 29% of sales, same as the last month. Now, cash sales accounted for 27%. I mentioned this earlier. Now, this was down from 28% the previous month, but up from 26% year over year. Okay, kind of a nothing burger. What does that really tell me? 28, 26, 27% cash sales. That seems to be pretty normal here in this economy. I wonder how it compares to the 1990s, the mid 90s, or even say even 2010, post the Great Recession when the market crashed. I'll look at that. I'm going to bring that back up when Michael returns. We'll chop that up and talk about that. Now, investors accounted for 13%. Now, this was down sharply. This was a decline of 3%, down from 16% last month and last year. So what does that tell us? Investors are slowing down. Why? Rates matter. Prices are still sticky. Values are up. But I also think smart investors are taking a time out. Let's be honest. They're being more selective. And I think smart investors are being patient and or seeking better deals. That's what we talk about here at One Rental at a Time. He's been talking about this for the last 3-4 weeks. The adjusted annualized rate is 3.95 million transactions. What does that mean? We believe, based on the existing numbers, what happened in July, the July sales numbers for existing resale homes, up basically 1.3%. The annualized rate, 3.95. Now, Michael seemed to think that we would drop below, I believe the number was 3.88. I'd have to go back to old show notes. But he thought that it was going to come in lower. Well, came in higher, slightly higher, 1.3%. Now, just to keep it moving, I want to talk a little bit about the NAR real estate settlement. That went into effect earlier this week. It actually went into effect on August the 17th. That was last Saturday. And what I will say is that the NAR has come up with some new rules. These rules have been adopted in most jurisdictions, most states. The local associations or the statewide associations are adopting these. The multiple listing services are adopting these. But I'll tell you, trying to get a straight answer in what the new rules are is not clear. It's messy and it's a lot of confusion. And let me tell you what that really means. If you're a real estate professional, it means opportunity. If you can figure out how to fill out the forms and adequately describe this in an intelligent way, which really, what was the lawsuit all about? It was all about transparency and fees. Sellers felt forced that they had to pay buyer agent commissions. And in fact, that's just not the case. Commissions have always been negotiable. However, as an industry leader, the National Association, the lawsuit was saying basically that they were basically pushing what would be an unfair practice or not transparent to the consumer. Now, all of those rules have changed. There's a little bit more paperwork. There's obviously a little bit more presentation and explanation on behalf of real estate agents, brokers, realtors. But I will tell you that for anybody who can adapt quickly, there's a lot of opportunity here. And also for one rental at a time investors, this is a great time for you to get out there with slower days on market, with growing inventory, and then a little bit of confusion, with regard to, how this NAR settlement works. This could be a great opportunity for you, for anybody that's in the market buying. And of course, for sellers, low inventory, it's still a good time to sell. So let's continue. Let's talk about mortgage rates. Now, mortgage rates fell for the third week in a row the last week. Now, what's interesting is that refinances took off. They were a whirlwind last week. This week, refinance of home loans dropped 15% from the previous week, according to the Mortgage Bankers Association. And basically, this is likely because last week they had a 23% surge in demand because, of course, rates were lower. There was a little hiccup last week. Rates dropped as low as about 6.3%. And then I'll show you here. Now, if we take a look at this chart here, you'll see the 30-year mortgage closing out this week. We're just bouncing around sub 6.5%. If we look back to last week, we actually had a little blip where rates dropped down as low as 6.3. We actually, even talking with Matt, the mortgage guy, who is an expert, part of the group here at One Rental at a Time, he talked about it, a spike like that, a decline. We're seeing rates, seeing refinance booms last week. And so what to be expected, whether the Fed reduces rates or not, come September, I think we're going to see rates bounce around somewhere between 6.5 to 6.25. That's my personal take on it. And it'll really be based on, again, Michael has said this, the unemployment, right? The unemployment number. That is such a big deal. So again, if we look at right here, this 30-year fixed mortgage, again, this is 20% down. This is an average from Mortgage Daily News, 6.48. Yeah, again, bouncing around just sub 6.5%. I do want to revisit, though, if you take a look at this chart here, this is interesting because this is existing home sales. And if you look at, some people said we're in a recession, we're not in a recession. Well, for the real estate industry, if you're a termite inspector, a home inspector, escrow officer, title, insurance agents, all the above, you've had a significant, decline in business. We've seen 30, 40% downturns in most markets. So looking at, if we just go back even, 2 years ago, 3 years ago, we peaked out over 6.4 million transactions. And now today we're hovering just short of 4 million transactions nationwide. So will transactions come back? Will we see a big increase in inventory? Well, with 2 and 3 and 4% mortgage rates out there, probably not going to see a lot of, a big tick up in transactions. This seems to be the new baseline or range around 4 million. And every indicator I see, unless, even if rates come down into the 5s, I still don't think it loosens up inventory that much. I mean, do we go 4.4, 4.5? I think, there'll always be transactions, but I think rates alone are not enough to loosen up inventory. Maybe some changes. Again, a lot of promises, presidential election. If we were to see, maybe as an example, I had this wild idea. It's an original idea to me. I didn't read it anywhere. But what if they changed the capital gain for landlords? Now a landlord potentially, if they sell to an owner occupant, how about that? Now talking about, solving a housing crisis, not to a corporate institution or even a landlord or investor like myself or some of my friends. But what if they sold to an owner occupant they got some kind of exemption on their capital gains, right? Or a deep discount on their capital gains tax, or the removal of the what's called depreciation recapture. Now, that would be creative. That would be a way to stimulate housing versus giving, free money or, whatever. I like free money, by the way. But just saying, right, this is something that, again, just an idea. I've not heard that bounced around. It's not necessarily an original thought, but very interesting. I'd love to hear from you. What do you think in the comments below? And I will participate in the comments. I'm hosting today. I'm also the school community. For those of you that are members, those of you that are not, it's $20. There's in the show notes here on YouTube. I'm going to be hosting Sunday morning live Q&A. I'm starting at 7:30 a.m. Pacific time. Would love to get on there and talk with you about deals, strategies, how to, where the opportunities are. But again, I think there's a lot of opportunity with the chaos within AR, with low transaction volume. I think a lot of confusion, a lot of fear out there. I think this could be an opportunity for all of you. So, folks, if you like the show, I know you like the show, especially Friday Financial News Wrap-Up. Let's be honest. It's one of the best. It's one of the best, right? If you like the show, please like, share, comment, subscribe. Thanks for watching. Please comment. Let me know. What would you like to see, to stimulate housing? Tax credits, maybe removing capital gains for landlords if they sell to an owner occupant, or what creative ideas do you have? Folks, thanks for watching. Have an awesome weekend.